In the last 1 year, gold ETFs rose by 30%. But what's more interesting is that gold has outperformed the NIFTY by over 200% in that same time. From adorning brides during weddings to serving as a trusted investment, gold holds a special place in the hearts of Indian investors. And it shows. Between 2020 and February 2025, the price of 24-karat gold in India has seen a significant rise, increasing from rupees 48,651 rupees per 10 grams in 2020 to rupees 87,380 rupees per 10 grams today. In the past, whenever the economy has been unstable, like it is right now, gold has been the go-to asset for many people. In this video, we're going to cover the top 5 reasons for gold's rise, from central banks' obsession with gold to investors hiding behind gold in fear of Trump's ongoing trade war. In recent years, central banks worldwide have been on a significant gold buying spree. It's contributing to the surge in gold prices significantly right now. So in 2024, all the RBIs of the world collectively added 1,045 tons to their gold reserves, marking this as the third consecutive year where purchases exceeded that 1,000 ton mark. Here is what's interesting. As of today, the world's gold reserves are estimated to be around 64,000 metric tons. So for comparison, if you stacked all those gold bricks, it would be 26 times taller than Mount Everest. So leading this accumulation of gold was the National Bank of Poland, which increased its reserves by 90 tons, bringing its total gold holdings to around 448 tons. Our beloved RBI only added 8 tons to its reserves in November 2024, elevating the gold holdings to 876 tons. The People's Bank of China also added 5 tons in November 2024, bringing its total reserves to around 2,264 tons. This trend of central banks increasing their gold reserves is a significant factor contributing to the rise in gold prices. But why are central banks buying so much gold is the real question.
I mean, I know you're a sophisticated guy. The world is a mess. The world is as angry as it gets.
Every country is afraid of Trump's incoming trade policies. So in early 2025, Trump imposed significant tariffs with a 25% tariff on most imports from Canada and Mexico. Additionally, he put a 10% tariff on all goods that are imported from China.
Very importantly, tomorrow tariffs 25% on Canada and 25% on Mexico.
The economic impact on the US from this was huge. Analysts from the Peterson Institute for International Economics estimated that these tariffs would result in an average tax increase of over $1,200 per US household in 2025. So this surge in consumer costs led investors to seek safe haven assets like gold. Clearly, Trump's tariff policies have significantly disrupted global trade dynamics, leading to increased production costs and consumer prices. So this pushed central banks to also invest in more gold. But Trump is not the only reason for gold's rise.
You're gambling with World War III. And what you're doing is very disrespectful to the country, this country.
Russian service and its partners Mediazona have been gathering and verifying the identities of more than 50,000 Russian fighters killed in Ukraine.
The ongoing Russia-Ukraine conflict has significantly influenced global gold prices. The conflict disrupted global supply chains, particularly in energy and commodities, contributing to global inflation. This effect of geopolitical tension has been calculated as well. Analysts have noted that an increase in the geopolitical risk index, the GPR index, by 100 units can result in approximately 2.5% positive impact on gold's return. Clearly, the Russia-Ukraine conflict created an environment of uncertainty, prompting investors to turn to gold as a secure store of value. Now comes the recent depreciation of the US dollar, which has played a significant role in the rising value of gold. As the dollar weakens, gold becomes more affordable for investors holding other currencies, therefore increasing its demand and price. In 2025, the dollar's trajectory took a downturn. By February 25, 2025, the DXY index had fallen to 106.33, nearing a 2-month low. In January 2025, the Consumer Price Index, the CPI, rose by 0.5% on a seasonably adjusted basis with a year-on-year increase of over 3%. This is important because higher inflation, particularly talking about the United States right now, can erode the purchasing power of the dollar, pushing investors to seek assets like gold. Now, all of these events that we have talked about so far have pushed retail investors to jump on the gold investing bandwagon. So this has further driven up the price of gold, which we will cover in the next section. So in early 2025, gold ETFs experienced substantial investments. So notably, the SPDR Gold Shares, which is one of the largest gold ETFs, witnessed an inflow of $1.9 billion on February 21st, 2025, marking the largest one-day inflow in the fund's 20-year history. Around the same time, physically backed gold ETFs saw their largest weekly inflow since March 2022, adding 52.4 metric tons, which is approximately around rupees 41,000 crores, to their holdings, valued at $5 billion. So this surge in valuation indicates that institutional investors are betting on continued increasing price of gold, driven by all the factors that we've talked about before this. In 2018, experts predicted that gold would reach around 83,000 rupees per 10 grams by 2025. However, recent forecasts have been raised to rupees 1,12,000 rupees per 10 grams. Investors who have consistently allocated up to 25% of their portfolio to gold are now selling. This is because most of them view gold as a cyclical investment and are taking advantage of the current high prices to gain some profits. Now, on the other hand, those who previously missed out on gold investments are now entering the market due to FOMO. These latecomers often jump in when prices are already high, which may limit their returns. Large institutions like PMS and alternative investment funds had minimal exposure to gold and now are probably regretting that. So here's our take. We're going to tell you what to do if you should invest in gold or not. It's pretty simple. If you have available cash and a risk appetite, investing 10 to 15% of your portfolio in gold and silver could be a sensible move. However, it's crucial to conduct thorough research and align your investments with your unique financial goals and risk tolerance. Thank you all for watching, and bye-bye. Stack Wealth is a new age investment management company that helps you take your wealth to new heights. Our team consists of experts with 25 plus years of experience managing investments for more than 1 lakh investors. Our team of experts help you curate a personalized mutual fund portfolio based on your goals and risk tolerance. They help you decide your asset allocation. They also help you identify high-performing sectors to help you generate additional returns. And finally, we help you manage and monitor your investments in real time. First, download the Stack Wealth app from the Play Store or App Store and complete your sign up by entering your mobile number and email ID. Now you can explore the app, get your personalized mutual fund portfolio, or browse our various investment opportunities. To start investing, you have to complete your KYC. Once your KYC is completed, you can start investing in your personalized mutual fund portfolio or explore our expert curated investment opportunities. If you're not sure where to begin, your dedicated wealth manager will help you. Now you can start an SIP or make a one-time investment. Remember, you can always pause your SIP anytime and edit the SIP amount if you want to increase or decrease it. Finally, you can sit back, relax, because our wealth team will rebalance your portfolio based on shifting market conditions, identify and recommend new investment opportunities, give you monthly portfolio reports so you know exactly how your portfolio is performing. If you found this video helpful, don't forget to hit that like button, subscribe to our channel, and tap the bell icon to stay notified, because we are making finance and investing as simple as possible for everyone. Thank you for watching, and goodbye.